Hi guys and welcome to my YouTube channel. My name is Zwannda, and in this video today I want to talk about what you need to do after you have registered for an EasyEquities account. So People Group, which is a parent company for EasyEquities, reported that they have about 1,400,000 people who have registered for EasyEquities accounts. However, only 500,000 people are active investors, which is really sad because the gap is huge. So people who have taken the step and go register are a lot. However, we have very few who are actually participating and benefiting from the stock market, right? So I thought, well, let me just put something together that will encourage you to or simplify it for you to go and invest, right? So I'm just gonna quickly go through the app itself and explaining where to find shares and how to find shares and some of the simple hints that you can look out for while you're buying, okay, through the charts. Okay, so before we can go there, I thought it's important for me to explain how we make money on shares. So we make money or income in two ways. Number one is capital gains, right? So if you have bought a company, let's say for 100 rand, and then the company performance is very well, and the value increases to 120 rand. So that difference, the 20 rand, is your capital gain, is the profit in which you make when you sell the company. Okay, and then number two, you have your dividends gain. Dividends gain is when the company is doing well and then they take a portion of their profit to give out to the shareholders. And some companies do pay dividends, some don't, and mainly companies with large cap pay dividends, and growth stocks normally don't pay dividends. They focus on reinvesting the profit towards development and just innovation and research, right? So let's get started. I'll be using my phone to walk you through the app of EasyEquities and explaining and just simplifying things so that when you open up the app, at least you know what you're looking into. So you have the accounts that are available when you open the app is your EasyEquities app. This is where you find South African listed stock, which are listed on the JSE Stock Exchange. You have TFSA, those are tax-free savings account. So stocks that you buy under this account do not get taxed. Do not get taxed on capital gains, do not get taxed on dividends, and just do not get taxed. Even the money that you deposit do not get taxed. So there is a limit to how much you can deposit annually for you to be able to benefit from this tax-free savings account. You must only deposit 36,000 annually. And remember, the tax year in South Africa starts in March, right? So March to Feb. And in your lifetime is 500,000, right? So within this tax-free savings account, the shares which you find inside are called exchange traded funds, right? So exchange traded funds simply means companies companies which are grouped together to mimic a sector. Let's say, for an example, mining. So you can find a mining ETF with different mining companies within it, right? I'll talk about it when I come back talking about the benefits of buying an ETF. And then you also have EasyEquities USD, which is where you find stocks that are listed on in the US. So you find stocks that are listed on the New York Stock Exchange and also stocks that are listed on Nasdaq Stock Exchange, which has a lot more technology or newer companies than Nasdaq. And then you have Easy Properties. So Easy Properties is an account that has shares that of property companies. Most of them just issue IPOs, and then you can buy when they're still issuing their IPO, right? You also have a plus sign, which you can press and get more accounts. On those accounts, and under that, you will find EasyEquities Australia, obviously listed in Australia. And then you will find your retirement annuity. You will find your pension fund, you will find your provident fund, which is options for retirement plans. So you can also choose that. Okay, so I will talk about just this first three, which is the USD and the ZAR and the TFSA. And I will start with the TFSA. This is simply because the TFSA is user friendly for beginners. Number one is tax free, like I said, so you don't get taxed on anything, right? As long as you keep to the terms and conditions of the tax-free savings account. And if you want to learn more on tax-free savings account, I will put the link to the video where I did tax-free savings account here, so that you can learn more on tax-free savings account. However, also within this tax-free savings account, you find ETFs, like I mentioned, which is a combination of different companies together, grouped together as a one share to mimic a certain index. So index, it will be something like the top 40, which is top South African companies by market cap, or the S&P 500, which is top 500 companies in the US. So ETF can try to mimic the trend and the performance of that index, or the trend and performance of a sector, let's say energy or mining, or something like that. So ETFs just try to mimic a certain index. Like they always have a benchmark in which they're trying to get. So more than anything, what I like about it is that it is diversified. So you're not only buying one stock, you're buying a combination of a couple of stocks. So if something goes wrong in one company, you still have a couple of more companies. Let's say on the top 40, you still have 39 more companies to back you up, right? Which is great, because then you don't lose everything all at once. That's why diversifying is key when it comes to investing, right? So also it gives you exposure to different companies, and sometimes it gives you exposure to different geographies. Sometimes it just, it gives you a huge exposure that you cannot get when you buy individual stocks. Okay, so if you're looking for, let's say, mining companies, you can't go and buy all mining companies that are in South Africa. The cost to do that will be too high, and also, it's just a lot of unnecessary spread, right? So it's better when you buy it as an ETF if you want an exposure to the mining industry. So that's why I love ETFs. And also it just gives you a risk buffer as a beginner, that you're not exposed to the very volatile, which is on the individual stock, the fluctuation of stock, because individual stocks are very volatile and ETFs are, a little bit stable. You can find a more aggressive ETFs, which is if maybe you understand your risk profile and you feel like I am aggressive investor, then you can also, as a beginner, go and invest in a more aggressive ETFs instead of starting with individual stocks. However, starting with individual stocks is not all bad, because the higher the risk or the potential risk, the higher the potential return. So on individual stocks, you have an ability or potential to make more money, right? Also, before I can continue, I just want to note that on ETFs, you still can get performance that is higher than that of the bank, which is a great plus. Okay. However, on individual stocks, which is found on EasyEquities, you will get higher risks, exposed to higher risk, and you will be exposed to higher potential of growth, right? So if you're a beginner, you can go take your 100 Rand, take your 200 Rand, and go buy a share on a company that you understand. For an example, ShopRite, Pick n Pay, your Spar. You know how those companies work. You hear the news every day about those companies, right? So you can go and buy them because you understand their business model, you understand what makes them grow. So it's easier for you to know when there's something happening that poses a risk to your shares, and then you can go buy if it's that of a long-term impact, right? So what I'm getting into is that you need to invest in something which you know. because it's easier to understand when you know something. For an example, I am in a mining industry, so if something is to happen in Sibanye Gold, it will easily get to me, right? So, and I will know what's happening, and I will relate faster, and I will know what I need to do as an investor. And I will know if the moves that Sibanye is doing is going to make them profitable, or it poses a risk to me as a shareholder. So yeah, that's it. So I'm just going to quickly open one individual stock, and then we're going to check the graphs, and I'll talk about the graphs and how to look at it. And then I'll open an ETF as well, and we'll just browse through the graph for the ETF as well. Hopefully I'll still have time for us to go and look into the US stock and check some of the individual US stock. Okay, US on EasyEquities USD. I'm sorry, I think I missed this. On EasyEquities USD, you can also find American listed ETFs. So American listed ETFs are not on the TFSA, because TFSA was created to encourage us South Africans to save. So it's a benefit for South Africans. Okay, so I am opening this account, and then we're just going to look at Pick n Pay and how it has been performing in the past. Okay, so this is the graph for Pick n Pay. It shows that it's currently selling at 54.68. Also, guys, like, price of shares fluctuates all the time, but I think the beauty about the stock market is that it has been growing ever since, right? So I was looking into all share index, meaning that the performance of, or the average performance of all the shares in the stock market. And it's very interesting that in the past 10 years, it has grown by 124%. And in the past 5 years, in 41%. And in the past 5 years, in the past 1 year, it has grown in 18.95%, which is way higher than the bank. So in as much as there's fluctuation in the stock market, it still goes up unless if the market crashes like 2008, but hey, it still goes up. Okay, so, and maybe that's why we're still invested. Okay, so looking at the graph for Pick n Pay, in the past month, it has grown by 5.93%, and in the past 3 months, it has dropped in minus 6%, and in the past 6 months, it has grown. So the way you look at it, you can say that what happened 3 months ago, because 6 months ago it was on positive, it was on plus 7%, and in the past 3 months it was on minus 6%, like what's happening to Pick n Pay. So another way to go and find those answers is to go and look to similar companies like your ShopRite, your Spar, to see if they had similar trends. Then you can, if they do have similar trends, you'll find that maybe it was logistics, right? Something which affects all the food retail market. So, but if it's a Pick n Pay specific kind of issues, then you can look into other fundamentals that can affect the performance of a Pick n Pay share. So I'll go into ETFs. So some of the things that you need to look into for ETFs is to be able to read the fact sheet. I think ETFs are transparent, guys. Like, they will tell you what they invest in. They will tell you what their losses are. They will tell you everything in 1-pager or 2-pager, right? Everything is there. So that's why I like them. So you can just go and Google a fact sheet of top 40 Centrix ETF, and then you will get everything that you need to know, the objective of that ETF and what it has been performing, and the cost. Because one beauty about ETF is that it's cheap, and it's not actively managed, so then the amounts of managing it is very cheap, right? Relatively cheap. So you need to check also, if you're choosing an ETF, if it has total expense ratio, which is the cost of managing an ETF, if it's high or if it's low. And you can find all that information from the fact sheet. So in this one, in this video, I will look into the S&P 500. Like I mentioned, S&P 500 is an ETF that is trying to mimic an index called S&P 500, which is top 500 companies that are listed in the US. So the companies that are in there include your Apple, your Microsoft, and Facebook or Meta, if I'm not mistaken. So it's like, those companies, top 500 companies. So this ETF, the S&P 500, gives you an exposure to all those top 500 companies. That's why I love ETFs. Okay, so I'm going to check the Cetrix one just to see how it has been performing. Okay, Cetrix S&P 500, I got it. So in the past month, it is on 0%. In the past 3 months, it was at plus 10.05%. In the past 6 months, it was on 18%. This is great. In the past year, it grew by plus 6.29%, which is really, really great. The bank will never give you this. So this is great performance. And I think other index also are measured against the S&P 500, and this is simply because of its great performance. Okay, so we'll go and look into the last company, which is a company that will be found on the USD account. And on the USD, what should I check? Apple. So Apple, I hold Apple, so I know it's been performing well. Apple in the past 1 month, it was at 2%. In the past 3 months, 18%. In the past 6 months, 21%. In the past year, 36% growth. Look at that. How amazing is that? So guys, with the little that I've given you, please just go check some of my videos where I go in depth on how to look for an ETF, and also how to make a research for an individual stocks, so that you can learn to do your own research. But otherwise, I hope this information, I'm trying to shout because it's starting to rain. Otherwise, I hope this information is enough for you to at least play around with the app and feel the confidence to go and invest. Even if it's 100 rand, even if it's 50 rand, you can go and start. Bye. Please don't forget to subscribe, like, and comment, and follow your girl on Instagram at Zwannda_Nana. Bye. It's raining.